Hey guys, welcome to another video. Have you ever been curious about how banks make a profit? How do banks operate? The funny thing about how a bank works is because of our trust. When we entrust our money to a bank to keep it secure for us, the bank offers it to someone else so they may profit from it. Legally, banks are permitted to lend much more credit than they do cash. Keep watching to find out how does banking really work. Banking 101. Number 4. Types of banks. The word bank refers to a wide range of distinct financial entities. It's important to understand the different sorts of banks, since they're not all the same in the goods or services they provide, or the purposes they serve. Some of them directly serve the general public, since they are consumer-facing. Others contribute more strategically to how money moves across the economy. Take a look below the banking awning. The following are available: central banks, retail banks, commercial banks, investment banks, shadow banks, saving and loan associations, credit unions. Each of these banks work in different ways and are designed for different purposes. Number 3. How do banks earn money? They invest the funds you loan them and make a respectable return on it. Then they offer you a piece of that profit in the form of interest. Therefore, they get some money from every dollar you deposit in your bank account. However, the majority of us have great faith in the bank's capacity to safeguard our funds and provide them to us upon request. A person may lend money to other individuals if they put money in their bank account. The bank receives a little sum of money, interest on deposits, from the depositing client, and more money, interest on loans, from the lending customer. The balance is taken by the bank so that it may profit. The amount of your deposit is added to your account after you deposit money into your bank, where it is combined with everyone else's money in a large pot. Every time you swipe a card at a shop, the retailer levies a tiny percentage of the money, referred to as an interchange charge, to the bank that issued the card. For credit cards, that comes to around 1.8%, whereas debit cards are closer to 0.3%. If Americans invest more than they earn, it may generate significant profits for banks. These are the expenses that the banks has to cover for things like ATM fees, overdraft fees, late payment fees, penalties, and more. Additionally, banks may manage all share trades as well as a stock or bond transaction, becoming more actively engaged in the financial industry. Additionally, banks may manage derivatives like options and manipulate the stock market by choosing to sell and buy shares for other people to buy. These days, banks are even indulging in insurance, as are a number of other financially linked practices such as trusts and estate planning. Banks are well positioned to meet a wide range of financial needs due to their extensive asset base and financial expertise, but with the simplicity of realizing that you are dealing with a highly regulated organization, trust protection is really what banks are all about. Number 2. The cost incurred by banks. The expense of keeping a deposit is rather high. Maintaining call center personnel, medicine marketing, ATM networking, and monitoring services. All of these expenses, which make up the majority of the bank's expenses, are dwarfed by the cost of operating physical branches. Companies offering branchless or online banking, like Simple, may save operating expenses and make more customer-friendly financial decisions. In conclusion, a bank works by paying clients small amounts to lend them money and then lending the money to others for larger quantities. We maintain the difference between the large amount, loan interest, and the little amount after controlling the whole cycle, interest on a savings account. Number 1. Types of bank accounts. Banks are often seen by customers as somewhere to store money or go in order to borrow money. You may open the following sorts of accounts with a bank: checking accounts, savings accounts, money market accounts, credit card accounts, auto loans, mortgage loans, student loans. Checking accounts. A checking account is a savings account that enables you to make deposits, bill payments, and purchases using your debit card by writing checks. Checking accounts are intended to store money that you expect to utilize soon. You could have to pay a monthly maintenance charge to have a checking account, depending on the bank. In addition to overdraft fees, banks may impose extra costs. Savings accounts. Deposit accounts or saving accounts are designed to save money that you don't necessarily want to spend right away. Although some banks may offer greater interest rates than others, these accounts often provide money to savers. You may be able to access the funds in your savings account through a branch, an ATM, or online, depending on the bank. The federal laws restricting you to 6 withdrawals from a savings account each month have been suspended by the government, but your bank may still impose a withdrawal limit, or for any withdrawal beyond 6, the bank may impose a fee. Money market accounts. Money market accounts often provide withdrawal possibilities akin to checking accounts and pay interest comparable to savings accounts. You could be able to use a debit card to write checks, withdraw money from an ATM, or make purchases, for instance. However, banks may impose a monthly withdrawal cap on withdrawals from savings and money market accounts. Saving money that you want to spend later may be a smart use for a money market account. You could decide to maintain your savings in a money market account with check writing capabilities if you're putting money down for a down payment on a house, for instance. You may just use a check from that account to make your down payment when you're ready to do so, or schedule a wire transfer. With that, we come to the end of the video. Don't forget to subscribe to our channel and hit the bell so you don't miss out on our future videos. If you enjoyed the content, then do leave a like. So until next time, take care and goodbye.